Tuesday, August 6th, and this is Markets Daily, hosted by me, Jen Sanasie. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So whether you're actively trading or simply fascinated by the volatility of crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. Crypto markets have bounced back today after stocks plunged on Monday, taking crypto markets down with them as recession fears spread throughout the United States. Both the Dow and the S&P 500 closed out their worst days since September 2022. Now, this coupled with a weak jobs report that we spoke about here on this show and the Bank of Japan's decision to tighten monetary policy, and we have economists, investors, and market analysts asking, is a recession on its way? And if a recession does occur, what should you be aware of? With economic uncertainty looming, understanding the potential impact on your investments is more crucial than ever. Let's break it down. First up, let's talk about volatility. As I know that you know, cryptocurrencies are already known for their wild price swings. In a recession, this volatility can increase as investors become more cautious. The economic uncertainty can lead to sharp price movements, both up and down, and as the market reacts to the latest news and economic indicators. During economic downturns, investors often seek out safe haven assets like gold. I know Bitcoin is sometimes called digital gold because of its limited supply and decentralized nature, but its relatively short history as a financial asset makes its behavior during a recession less predictable. Some might see it as a safe haven, while some might see it as too risky and turn to more traditional assets. Now, during a recession, investors usually reduce their exposure to high-risk assets, and cryptocurrencies are generally considered high-risk investments. I don't know if you're new here and you didn't know that, but I think that if you listen to this show, you know that they're considered high risk. This could lead to potential sell-offs, and the shift in risk appetite can drive prices down as investors seek more stable investments. Now, liquidity can also be a concern here. In a recession, liquidity in all markets tends to decrease as investors hold on to cash or more liquid assets. This reduced trading volume in the crypto markets can lead to increased price volatility, making it harder to buy or sell large amounts of cryptocurrency without affecting the price. If you're a regular listener to this show, you'll know that we've been talking a lot about the government's role in crypto ahead of the upcoming elections. Now, economic downturns can prompt more aggressive actions from governments and regulators to stabilize the financial system. This could lead to new regulations affecting the crypto markets. But also, if you listen to this show, you'll know that it takes a really, really long time, especially in the United States, to get any kind of regulation. So I don't know if this one is a concern. Depending on the nature of these regulations, they could either support or hinder the growth of cryptocurrencies, if we get any regulation at all. Now, interestingly, economic instability could accelerate the adoption of cryptocurrencies. In countries facing severe economic crisis, people often turn to cryptocurrencies as alternatives to traditional banking systems. We've seen examples like this in places like Argentina, Russia, Nigeria, and Turkey. Increased adoption could provide a new utility and stability to the crypto markets. Now, we can't forget the growing role of the institutional investor here. As you know, we've had the spot Bitcoin and spot Ether ETFs approved here in the United States. And now more than ever, it's important to watch how institutional investors behave as we look at the potential for a recession. Their behavior, whether they view crypto as a hedge or a risk to be avoided, can significantly influence market dynamics, either stabilizing or further destabilizing the market. Now, while it's not yet clear whether or not we'll experience a recession, it's good to start thinking about your own investment thesis and what you might do with your assets should a recession become imminent. Thank you so much for listening to today's show and coming on this journey with me to better understand the crypto markets. If you enjoyed this episode, be sure to subscribe to the CoinDesk Podcast Network. That's available on your preferred podcast platform. And don't forget to give us a 5-star review. If you prefer to watch the show, we are on YouTube. Subscribe to our channel, like this video, leave a comment, let us know how we're doing. Let us know if you'd like to see different content, and we'll be sure to take that into consideration. Your support means the world to us. We hope you have a fantastic day, and we'll see you tomorrow.